Okay, so why don't we get started? For those of you who tuned in today to hear Brian Najenda of Springport Partners speak, I apologize. He lost his voice and he's unable to participate in our panel today. So if you haven't joined us in past, welcome. As many of you know, ImpactPHL is a nonprofit advocacy organization helping investors large and small to align their financial assets with their values and to create lasting change in the greater Philadelphia region. If you're interested in this type of programming and are not currently a member of ImpactPHL, please contact Charnay Robinson-Williams. So you'll see her contact information in the chat box. So why this program? And our program is built on the back of the 2012 Jobs Act that allow companies to acquire funding through online portals from non-accredited investors. And the difference is that accredited investors have to have income $200,000 to $300,000 a year, have to have $1 million of income. So non-accredited investors is anyone else. And the type of funding vehicle that we're looking at today is crowdfunding. So there's a current movement in Philadelphia that believes crowdfunding investing is a critical financial element in the financial success of socially impactful businesses, and in the creation of a more inclusive, equitable, and resilient regional economy. So our panelists today are George Cook and Peter Leone, and they'll investigate whether groups that have historically been underrepresented in the capital markets, both as investors and investees, benefit from the growing trend of crowdfunding investing. So we'd like this program to be interactive. So if you have any questions, put them in the Zoom chat box. We'll get those towards the end of the program. And respect of everyone's time, we'll stop promptly at 2 o'clock. So why don't we get going, have a little bit of fun. And I'm going to ask George and Peter to introduce themselves. So George, why don't you lead it off?
Yeah, thank you, Michael. Hi, I'm George Cook. I'm the co-founder and CEO of Honeycomb Credit. Honeycomb is a loan crowdfunding platform based in Pittsburgh, Pennsylvania. We allow independently owned small businesses to borrow capital from their own customers and fans and community members. My background is in community banking. So my family's been running a community bank in rural Pennsylvania for 130 years. Grew up in the family business and then spent most of my early career doing big data credit analytics, basically helping large lenders make faster, smarter lending decisions. And I saw that the banking industry was changing a lot, and those changes were making it harder for a lot of Main Street small businesses to access fair capital.
Thank you. And Peter?
I spent 3 decades running a heavy manufacturing business in southern New Jersey. And after selling it, I've spent the last decade principally involved in investing in startups, both with Investor Circle and with Robinhood Ventures here in Philadelphia. Okay,
thank you. So to start out, George, if I could start out just with a couple of questions. And the first one, what is crowdfunding? So if you could give us some background and also let us know, is this a new concept or has this been around for a while?
Yeah, certainly. So crowdfunding is at it boiled down to its core is this idea of a community coming together, making small contributions to a project that they care about collectively, pooling funds together to make that project a reality. This is certainly not a new concept. Famously, the base of the Statue of Liberty is crowdfunded. People mailed in $1 at a time to fund that. There are stories of railroads in the 1850s and through the 1880s during the railroad boom of being crowdfunded so that they would get a stop in their town. So the idea of crowdfunding has been around for a very long time. It predates the internet. Through the evolution of the internet, people have become most familiar with crowdfunding as reward crowdfunding or gift crowdfunding. You think about someone that has a tragedy as an example, and they have a GoFundMe campaign, or someone invented a cool new robot, and you can pre-purchase one of those on Kickstarter. So that gift and reward crowdfunding has become really popular. And just recently, in the past several years, under the Jobs Act, some rules were changed to open up the idea of investment crowdfunding, to let people start to invest in small businesses or startups through debt or equity or revenue share, and participate in the financial success of privately held small businesses through this idea of crowdfunding and getting the community or a group of people to support a specific project within that business.
Okay, yeah, thank you. That's pretty clear. And Peter, if I could turn to you and just ask, what is relationship building lending, and how does it apply to crowdfunding?
Well, that's a good question. I think one of the challenges with crowdfunding is assembling a crowd sufficient to fund whatever project you have. And one way of assisting that kind of enterprise is to assemble people who have substantial capital that they can devote to these funding activities. I think that's the basic idea here.
Okay, so that they're of like mind or like values. That's is that more difficult to find, or does it depend on the project? I guess is the other piece.
I guess that's probably right, but George might be better fitted to answer that question than I am, since.
Yeah, what is your thoughts on that, George? How difficult is it to assemble a crowd?
Yeah, I think it maybe perhaps going back to what is this relationship lending model, and kind of how does that evolve into how I think about crowdfunding and aggregating a community together. I think the notion of relationship banking is historically one of the core tenets of most small community banks, of most regional lenders. But because there's been such a dramatic consolidation within the banking industry, a lot of those decision-making decisions have been centralized, and as a result, instead of having a lot of qualitative information and feedback about how a small business is performing within a community, if they make a good product, if they treat their customers well, we're over-indexing as a society on the quantitative of just the pure numbers of the business. And when a business doesn't have a lot of operating history, as most businesses don't, it can be really hard to replace that qualitative with quantitative data. And so as I think about where crowdfunding kind of fits in here, is this balance between quantitative and qualitative. Obviously, understanding that the financial performance of a business is important, but then also activating people who know the business, who know if the bakery makes a good baguette, and allowing them to have decision-making power within their own community. And so that's really how we think about activating that community, is really thinking about who knows the business and how do you make them aware of the opportunity and let them make the ultimate decision on which businesses are getting access to capital, because they're the end customer and they know which businesses are a good fit for their own local community.
So it's getting back to, it sounds like anyway, to that whole, I think of it, It's a Wonderful Life, the banker in that, Jimmy Stewart, it was about relationship lending. And it sounds like the crowdfunding is getting back to that basis. So Peter, you've
got a point, Michael.
Yeah,
you've got a point. When I was in high school, my father quit his job to start his own business. And he qualified for a federal loan program, provided he was able to raise a certain amount of money from people in the small town where the business was to be located. A local banker took an interest in my father's project and introduced him to, the local doctors and business people. The bonds they bought made it possible for to build the factory that now under successor ownership is providing a couple hundred jobs in this community 55 years later. What that banker did for my father isn't entirely different from what Honeycomb seeks to do. But, you know, the bank, that local bank was swallowed up by another bank that was swallowed up, et cetera. And it's now an outpost of Bank of America, which, you know, can't really engage in character lending or building a community of people who can support local businesses in this fashion. So there's a void out there for this in this market.
That's a really interesting story. And so your father had nothing, you know, in the way of resources to start the business. And can you tell us a little bit about the business and what that became?
Well, it was a glass manufacturing, rather still is, a glass manufacturing business, bottles and jars, packaging. In the late 60s, he managed to figure out how to persuade enough people to have trust in his ability to make this work, both as a financial matter and as a community development enterprise. It's grew to a substantial size, and I spent most of my life running it after he died.
And was the money that was raised in the community, was it on the debt or equity side?
It was bonds.
Okay. So maybe, George, if you could tell us what the difference is with crowdfunding between debt and equity crowdfunding platforms.
Yeah, certainly. So a number of equity crowdfunding platforms have really taken off, and some of the names are becoming a little bit more household. So WeFunder, Republic, Start Engine are some of the larger platforms out there. They're really designed to democratize angel investing is I think how they think about themselves, really opening up high tech, high growth startups to investors who might not be accredited, investors who might not be able to write a $20,000 check, but who want the upside of investing in startups. And this has become really important as companies have stayed private longer. You hear about companies raising a Series F or a Series G before they end up IPOing. And what that means is there's just less upside for people to invest in businesses in the public market. And a lot of the equity crowdfunding platforms are there to try to democratize that and open up this asset class to non-accredited investors. We're on the opposite side of the same coin, if you will. You know, we think about the world from the perspective of where access to capital gaps are greatest. We believe that the next Facebook is probably not struggling to get access to capital today, but the local coffee shop might be, or the restaurant or the food truck might be having a hard time unlocking capital. And so we start from that as our kind of North Star. How do we find creditworthy businesses that are on a growth trajectory, but for whatever reason can't access capital from traditional lending sources? And we start with them. And so typically these are not businesses that are going to have an IPO. They're not going to get sold. So the liquidity event that you would associate with an equity investment isn't always there for a lot of these Main Street small businesses. So most of what we end up doing is debt focused. We do some revenue share, we do some equity, you know, depending on the circumstances of the deal, but really with kind of these Main Street small businesses staying as our front and center North Star.
And are these businesses, and now I get kind of why I started Honeycomb, because these are businesses that are probably not getting the financing, you know, through the financial institution, bank and other financial institutions, or at any type of the terms that they could live by for a business that are favorable. So the communities that you touch, are these generally the underserved communities, or you know, is it a host of companies? And why, so I get why you started Honeycomb, but then when we look at it and you've announced that you're expanding your operations to Philadelphia, why Philadelphia?
Yeah, so in terms of the types of businesses that we serve, it runs the gamut. It's rural, it's suburban, it's urban. It is across demographic groups. It really does run a wide range. Specifically, this year we have found that about 80% of the businesses we work with are either woman-owned, minority-owned, and/or based in low to moderate income communities. Within that, about 60% of the businesses we work with are woman-owned, about 40% are minority-owned. And that means that we're able to put money to work in communities that are increasingly overlooked by traditional lenders. And so just the diversity of businesses we're able to bring on the platform and get funded is really exciting for us, and one of the things that allows us to attract really great talent and to really continue our mission-focused work of supporting businesses that are kind of locked out in the cold right now. In terms of why we think about Philadelphia, we are expanding right now. There's kind of about 10 markets across the country that we're thinking about launching in. We have done deals at this point in 27 different states. We have a nationwide license, and through the pandemic, we saw a lot of inbound traffic from all over the country, and we were able to support businesses regardless of where they're located. But we've discovered that there's a lot of really strong network effects in what we're doing. That when one small business works with us, other businesses nearby on that same main street or across town, but they collaborate together, also start to learn about Honeycomb. And so for us, acquiring one small business isn't just about bringing one new business onto the platform. It's kind of a marketing campaign for Honeycomb. It's educating local people and the idea that they can invest in local businesses in their own community. And it's also educating other businesses that this is a new type of way to raise funds. And so as we were assessing which markets we wanted to prioritize, one, I love Philadelphia, so I love excuses to hop in the car and head over. But two, we have some really fun success stories here in Philadelphia. We have worked with Red Crest Kitchen, who raised over $100,000 to move into a new location, and several other really fun businesses in Greater Philly. So it allows us to already have sort of a little bit of a frame of reference and an ability to tap into these networks of small businesses. We have an existing pool of investors in Philadelphia who have invested in local businesses. And importantly, and I know unfortunately Brian couldn't join us, but we're in conversations right now with SpringPoint about a partnership to bring institutional capital onto the platform in Philadelphia to really supplement and complement what the community can bring together as well. So that furthers our value proposition and allows us to make sure we can continue to serve really diverse businesses as we expand into Philadelphia.
So are you the intermediary? So the collector. So if you go back to Peter's example of his father starting a business, and he went out and gathered dollars himself. So are you saying that instead of the businesses to do this, what Honeycomb does is it will get and collect money from investors, both the non-accredited investors, the retail type investors, and now also you just said institutional investors. And with that pool, then you'll help find businesses that are creditworthy to lend to. Is that right?
So we always start with the businesses, and to clarify, 60 to 70% of the investors are coming from the network of a business owner. So it really is the business owner going out and activating their own local community, and we're helping them along the way. We support them with social media, we support them with email, we support them with in-store collateral. We give them the tools that they can effectively communicate that they're growing their business and they're using Honeycomb as a tool to do that. But it really is on them to go out and identify those investors and convert them. What we recognize is, particularly in chronically underinvested communities, where there might not be as much wealth in the community, it can be really challenging to catalyze that wealth and bring it together to support businesses. So we want that local signal from local people who trust the business, but recognize that to fully capitalize the business, sometimes we need other sources of capital involved in a project as well. So for us, we always start with helping the business activate their own customers, and then we think about ways to bring in other sources of capital as well to make sure the business is fully capitalized and set up for success.
So if these businesses are, if they have difficulty getting funding, I automatically think of, others. So like if people that have difficulty getting a car loan and so on, they're normally paying very high interest rates, and they're considered high risk investments for the financial institutions with a high default rate. Is that the same market that you're tapping into?
Yes and no. So we find a lot of businesses that are very creditworthy want to work with Honeycomb because they see the value in getting their customers invested in their business, that they want to pay back their neighbors and fans instead of paying back Bank of America. And they just see the inherent marketing value of keeping the money in the local economy and getting people to come back every time they get a payment. But we also are able to extend credit to businesses that might not be able to unlock capital from a traditional lender. And the way I think about it is a lot of traditional lenders are just saying, businesses with less than 3 years of operating history are really risky. We're not going to work with them, right? We all know businesses that have been around for longer than 3 years, right? So if we shut off capital to all businesses that are younger than 3 years old, all of a sudden we don't have any businesses. There's no pipeline of businesses to become businesses that are 5 years old, right? So I think that the beauty of what Honeycomb is doing is by sourcing local capital, we're really able to differentiate. It's almost like we have a view of the data that no one other lenders have, because we're able to see which businesses have really captivated the attention and love of their local community and use that as an indicator of which businesses have staying power. And their loan only is going to tip. They're only going to receive their funding if they can convince their community that they need those funds. So that allows us to offer really competitive rates to avoid some of these predatory loans that are out there, and kind of segment through what is perceived as a very risky group of businesses, but we're able to kind of fine tune it and kind of see which ones maybe are very high risk and which ones actually aren't that high risk because the community really loves and supports them.
So what is the approximate default rate then?
Yeah, the charge-off rate in the portfolio has been about 2.5%. Considering that the risk tier of businesses we're able to work with, that's really great. A lot of online lenders are seeing double digits in terms of their default rate. So we're really pleased with how the portfolio is performing and how this is viewed as a risk indicator. The local community support can actually be tied in as a risk indicator.
So what's interesting with this, and I'm going to go back to Peter, is that Investor Circle is a group in Philadelphia that are made up of accredited investors that invest in companies that can be socially and environmentally impactful in the greater Philadelphia region. And I wondered why Peter personally and the group as a whole had identified someone like Honeycomb as a company that they funded or in the process of funding.
Well, on a business basis, the demise of Main Street lending has been a contributor to a stagnant rate of business formation over the last couple of decades, which I think has also contributed to the failure of wealth accumulation among low and middle class households to keep pace with the rate of wealth accumulation among those of us who are already fortunate. The pandemic, though, changed a lot of people's thinking about their jobs and has resulted in a dramatic increase in new business formation, which presents an exciting opportunity in an area where there's really a void. From an impact perspective, investor circles standard fare is, tech startups and healthcare initiatives, stuff like that. And they're all important, but we don't really see a lot of startups that have the potential directly to improve Philadelphia's neighborhoods, or especially economic mobility among Philadelphia's Black and brown populations, which now constitute 60% of the people in the city. Many people in those groups are not well connected to the larger financial system. And the result is that there are, according to the Pew, and I see Tom Ginsburg in our audience, only 6% of Philadelphia's businesses were pre-pandemic owned by Blacks, and only 4% by Hispanics. And total sales revenue for Philadelphia businesses owned by Blacks, Asians, and Hispanics accounted for only 11% of total sales revenue in the city. Honeycomb's model, I think, holds the potential to address some of the financial challenges of small business, and particularly of Black and brown owned businesses in the city. And as George mentioned, Honeycomb agreed to locate a business development person in Philadelphia to work with local firms. So it makes sense from an investor's circle standpoint, because of course we try to do well by doing good.
Yeah, and this is just a fascinating topic for me, Peter, because if you look at it, there's a lot of people that would say, well, why is this important to support underserved Black and brown businesses, women-owned businesses? And the whole thing, if you're in these areas that are currently that have issues, that the businesses aren't thriving, the overall economy of the city and surrounding areas also are not thriving. So if you could kind of raise them up, these are going to be your future, insurance purchasers and meaningful members of the business community.
There are all kinds of good reasons.
Yeah. So what I don't get, because we've had future programs or prior programs on this, is that I understand what the need is, and I think Peter, said it very well. But what I don't get is that we've had programs about CDFIs and the reinvestment fund and others, in the greater Philadelphia area. And why do we need a crowdfunding platform when we already have CDFIs? So, George, if you want to, possibly talk about that.
Yeah, absolutely. And to be really clear, we love CDFIs, community development financial institutions, for anyone that isn't familiar. And we work really closely with several CDFIs. I think what we've identified is CDFIs are really good at the operations of lending and managing a loan portfolio, and they tend to be really good at technical assistance for small businesses. Because a lot of CDFIs are structured as nonprofits, they tend to have a lot more limited resources in terms of getting the word out about their CDFI. In terms of sales and marketing, it can be really challenging to tell people about all the great things that they're offering. And it's also important to understand that if you look at the whole kind of small business lending ecosystem, CDFIs today are only about 2%. And I think a lot of that is because they have a hard time kind of getting the word out about all the great things that they're doing. So as we look at how the CDFI industry has really grown over the past couple of years, they've done a really phenomenal job of aligning their goals with the kind of the zeitgeist and the impact goals that so much of our society has right now. And they've done a really good job of building up their balance sheets and having a lot of capital ready to deploy to really diverse businesses and getting money to work really impactfully in communities that need it. But they haven't always done a great job of kind of letting people know that they're there and driving businesses to them. And so one of the things we've been able to start doing because of the very public nature of what we're doing, we've been able to start working side by side with CDFIs, where Honeycomb can get the word out, because every campaign is run on Honeycomb, sort of a marketing campaign for Honeycomb. People are learning about this funding source, get more and more businesses in a local community onto Honeycomb, validate that they have local community support, and then work with CDFIs as co-lenders to come in and top off these businesses to make sure that they are fully capitalized. And that's, getting the businesses the technical assistance they need. It's getting the CDFIs validation that the businesses are really loved and supported in the community, and helping kind of bridge the gap between the pools of capital that the CDFIs have and the businesses that we're able to really effectively touch in the local community. It also has the added benefit then, of course, that the CDFIs are now supporting local community wealth building. It's not just the CDFI getting repaid, but also local neighbors as well. So it enables the CDFI to help keep even more of the money that they're helping to generate in the local economy as well.
And with that, what type of businesses are you looking at? Where are they at in their life cycle? How big are they? What are their generally the types of loans that they're looking for?
Yeah, so it runs the gamut. Typically, our loans are between $25,000 and $250,000. So it kind of gives you a sense. We work with some startup businesses, but generally there's some operating history. We like to see at least 6 months of operating history for a small business. We've worked with businesses that have been around for 50 years, but the average is probably 1 or 2 years. These are typically a couple $100,000 in revenue, capital need that might be a little bit too small for a bank loan, but is perhaps a little bit too big for a Kiva or a local micro lender. And so they're kind of stuck in that where there's a missing rung on the ladder. And so Honeycomb can be that source of capital to help them to get to bankability over the long term.
Okay. And on right before the audience joined us, Peter had brought something up that I thought that was pretty interesting in regards to Investor Circle, and it also crosses into ImpactPHL and the idea of other organizations. And he had brought up Page Capital. So Peter, maybe if you want to talk a little bit about that, and if you have a question to George about this, that would be good.
Well, it's really an observation about areas in which there are common interests. One of the PAGE program as many of you know, is an initiative designed to make it possible for smaller entrepreneurs, particularly those from disadvantaged communities, to work with the big institutions in Philadelphia like CHOP and Penn, stuff like that. One of the things that ImpactPHL has been involved in that regard has been what has become known as the Hurdle Fund, which is designed to provide modest size grants to businesses that need something. If a baker might need another oven in order to do business, have the capacity to do business with one of these large institutions. That's the kind of head start that many businesses need and don't have an established financial medium for. And so it does strike me that some collaboration between various of these enterprises with Honeycomb might be of great use.
And how does that sound to you, George?
Absolutely. I think when we think about where we can serve, there's on the smaller end, economically, it's very hard for us to do $5,000 or $10,000. And so where there can be micro loans or micro grants and tools to really kind of be the first capital to entrepreneurs, that can be incredibly impactful to help people get on the path to being credit worthy. And then on the other end of the spectrum, doing $500,000, that's a lot of $100 checks to capture from the community. And so there's places where crowdfunding works really, really well. And there's places where it's a little bit more challenging. And so for us, it's all about how can we fit into the ecosystem and not steal someone else's slice of the pie, but be an additive to the local community, and support the other resources that are out there.
And with this page program, anyone that has interest in that, Megan McFadden with ImpactPHL is heading that up. So if they have an interest, just reach out to Megan. You can do so through Charnay. But part of this program, like all of our programs, is education. The other piece of this is moving money. And so, George, if we could go back to you and just talk a little bit about Honeycomb, and if you could tell us what is your raise right now? What are you looking to raise, and what are you looking for from your next investors? And if you could just tell us a little bit about the product too, that you're offering business owners, so including the terms, the geographies, the life cycle, and etc.
Yeah, certainly. So we are a startup ourselves. We're expanding. We're growing. We are in the middle of a fundraise right now, kind of towards the end of that fundraise. For SEC reasons, I can't solicit funds or talk about any of the details. But we are kind of actively having these conversations. We're bringing on a couple of new investors, specifically really kind of two types of investors we're looking for. One, we're bringing on some folks that just have scaled startups before. I'm a first-time founder. My co-founders are first-time founders. We're trying to build a really large company that's going to serve a lot of businesses and drive a lot of economic activity. So looking for people in our corner that can be supportive and that have been there and done that. And then also impact investors. We take our impact really seriously. We want that to remain a big driver of our business. And so we're looking for folks who can come onto the platform, who can offer connections and relationships to help us unlock more institutional capital, and who also can just help us make sure that we're baking that impact into our DNA as we continue to scale our business. In terms of the types of loans we're offering to businesses, as I mentioned, typically the sizes are anywhere from $25,000 up to $250,000. The terms are generally 3 to 5 years, sometimes a little shorter, sometimes a little longer. Generally, these are amortizing loans, so businesses are paying down interest and principal over the life of the loan. They make one simple monthly payment, and then we automatically distribute that back out to all of the people that invested in their campaign, which again becomes a really interesting marketing moment for these businesses as well, because they're not just paying back their lender, they're paying back their customers. And there's so many really fun stories of people receiving their repayment and getting in the car and going and visiting the businesses and keeping that money in the local economy. In terms of interest rates, obviously we live in a rising interest rate environment right now. Historically, our average interest rate was about 9%. That's been pegged roughly to the prime rate. And so we're seeing that start to grow as the Federal Reserve continues to raise rates.
And are these loans, are they balloon type loans, which they all need to be paid back at the end of the 3 to 5 year period plus interest, or are they paying, or are you paying back the investors on a quarterly or otherwise basis?
Yeah, so businesses are making one monthly payment, much like they would with a bank loan. We then hold the funds and distribute them on a quarterly basis to all of the investors. So they're paying principal and interest over the life of the loan. So there is no balloon payment.
So there's two opportunities for investors. The one opportunity is to invest in the growth of Honeycomb, and the other is to invest in the businesses in the greater Philadelphia region. Is that correct?
That's right, yeah.
So when I look at organizations, if I look at things that I see advertised, such as Amazon, PayPal, Square, they're lending money to small businesses, business owners too. So are they offering similar types of programs that crowdfunding companies do?
No, so as banks have pulled back, increasingly we're seeing a lot of small business online lenders popping up. It runs the gamut. There's startups like Cabbage, who was acquired by Amex. There's On Deck and Everest and a whole slew of startups that are doing this. There's also a lot of Silicon Valley incumbents. You mentioned PayPal, you mentioned Amazon. Square is a very large small business lender now. Generally speaking, most of these online lenders, they're doing short-term business loans. We've seen the terms as short as a couple of weeks. Generally speaking, they're just a couple of months in length. Their effective interest rate is typically quite high. We generally see at least kind of a 40% APR minimum. We've seen loans with interest rates as high as 300% APR for small businesses. So they can be bordering on predatory, if not outright predatory. And generally speaking, they're kind of short-term capital needs, and they have a place. Sometimes they can be really valuable for businesses. I think, unfortunately, sometimes they're used as a little bit of a square peg in a round hole. Businesses are using them like their term loans and just kind of renewing and refinancing them over and over again, which gets them on a little bit of a hamster wheel of just trying to pay back these very expensive loans over time.
Okay. So what the amount of your raise again? What are you targeting for your raise in dollar amount?
I don't think I can share the terms in a public setting like this. Okay.
What I'm trying to get to is that money that's put forth. So Peter, Investor Circle, have invested in you. What is that for? So if you look at the next 12 months, where do you see Honeycomb in the ecosystem in the greater Philadelphia area?
Yeah, so for us, it's been a lot of investment in the operations and the technology to really make sure that we are at a point that we can host many times the number of businesses that are live on the platform now. We're really satisfied with the improvements we've made in the tech and the operations and the scalability there. For us now, it's really cranking up the number of businesses we're able to work with, continuing the investments in marketing and sales, hiring someone in Philadelphia, hiring someone in other markets, really starting to dramatically increase the number of businesses on the platform, and just continue to grow through volume.
Okay. And then what concerns, before we get to audience questions, what concerns do you have going forward as a business owner?
We're in an interesting time for any lender, I think. This is a strange economy. Still strong job growth, but a lot of signs pointing towards a recession, and I think people are becoming increasingly comfortable with the idea that we're either in a recession or we're headed towards one. Obviously, that changes the small business lending landscape dramatically in both. From our perspective, both good ways and bad ways. I think it means other lenders are vanishing. A lot of other people are pulling back pretty aggressively. So there's more white space. There's more opportunity for Honeycomb to get the word out there. But at the same time, there is more credit risk. There's a lot of businesses that are going to struggle, and we have to make sure we're being really thoughtful about which businesses we invite onto the platform and make sure that they've got a path to repayment. And then, of course, making sure the businesses that are already in our portfolio, the businesses we've already worked with, have resources that they can work through a tough economy and engage with their own investors and find a path to keep growing through a recession.
Okay, great. So what we're going to do is turn to audience questions. There's a number of questions in the chat box. So I'm going to turn things over to Corey Donovan. He's the Executive Director of ImpactPHL. And Corey, if you just want to read some of the questions and who they're from the group.
Sure, and I've got one of my own, but I'll wait on that one as long as I get some time to get it in. So Margaret Bradley put into the chat, if we can push banks to lend and we could capitalize CDFIs to lend, is there some other reason we want to support crowdfunding, even though it's obviously less efficient than moving money at scale? So I think you addressed that somewhat, but I think it's, if there's anything to add with that, or maybe even from Peter's perspective.
I think from my perspective, I think those are noble causes, right? I think if we can get banks to lend to small businesses and we can more fully capitalize CDFIs, we should do those things. It's really important to understand that there's $1 trillion of small business loans a year, right? This is a very large market, and I don't think that any one thing is going to fix it. I think that the unique piece that Honeycomb or debt crowdfunding generally can bring to the table is the local community wealth building aspect. Today, if you are not a millionaire, the only way for you to invest locally in your own economy is to buy real estate. And that can be out of touch for a lot of people. So creating opportunities where people in the community can put their own dollars to work in the local economy. And we have, I can't tell you how many people come to us at Honeycomb and say, this is the first investment I ever made. The $100 I lent to my local coffee shop or my local restaurant is literally the first investment I ever made. That shows people that they can invest in things that are really tangible, that they can really sink their teeth into and understand, and they can earn a return on it. So I think that's one piece yes, let's work on getting banks to lend again. Let's work on capitalizing businesses. But I think this is kind of one dynamic that we can bring above and beyond.
Yeah, and I'll just emphasize that I think that the who benefits when things work out is an important detail to crowdfunding, because for as little as $100, right, a lot of those other investments are a lot higher mark for people, but people can invest in their own backyard for as little as $100. Mosaic Development Partners here in Philly has always done a crowdfunding campaign with their projects. And they do it not because they need the money, but they do it because of who can benefit when they succeed and who comes along for the ride. Another question asked by Shannon Mudd is, can you talk about the different types of partnerships you've had, like in Jacksonville, and how it worked? I think I also, George, to the degree that you can talk about it, you talked earlier about institutional capital, and I know there's some stuff on the doorstep for you here in Philadelphia. So, how do those partnerships work and what's happening here in Philadelphia? To the degree you can talk about it or tease it out.
Yeah, absolutely. I think, and hi Shannon, good to see you. I think for us, the partnership in Jacksonville, Florida, with the Jesse Paul DuPont Foundation. We have a partnership in kind of across the Deep South with Souls Grown Deep. We have one in Chicago that's about to spin up. And really kind of the way these operate are foundations or impact investors are sharing their investment goals. So that might be, in the case of Souls Grown Deep, they're focused on investing in Black-owned businesses across the Deep South. In the case of the Jesse Paul DuPont Foundation, they're focused on investing in all business owners across the 6 counties of Greater Jacksonville, and prioritizing women-owned and Black-owned businesses in Greater Jacksonville. And so they're kind of setting their criteria. Honeycomb is then going out and finding businesses that meet those criteria, working with them to run crowdfunding campaigns, getting them to their funding goal, and then bringing in the institutional capital as sort of the cherry on top. We're sort of viewing this as the rich uncle for business owners that might not have a rich uncle, bringing these foundations and impact investors in on top of the campaign to invest side by side with the community to really fully capitalize these businesses and set them up to run a really great project.
Great. I'm going to jump in with my question because I want to make sure we get it in. And if anybody else has questions, they want to jump in the chat, we can take a look at them. But George, I know as you focus in on the Philadelphia market to serve the businesses in the Philadelphia market, led by the Investment with Investor Circle and the partnership that's developing here, I imagine one of the biggest challenges you have is getting the Philadelphia market, the businesses on your platform so that there is product available for the rest of us to be able to invest. So with the people on this call, many of whom I'm looking down the list are leaders in the Philadelphia community. how can we help with that, in terms of getting the word out, in terms of getting those businesses on the platform, et cetera? Question to you.
Yeah, absolutely. So really excited. We're hopefully just weeks away from having a representative start in Philadelphia. So having someone on the ground in Philadelphia who can be really the voice and face of Honeycomb. So, if you are in one of the organizations that touches businesses that you're interested in connecting and being helpful, really encourage you to reach out. My email is simply george@honeycombcredit.com. I'll put it in the chat here in a second. Reach out. Let's set some time, especially once we have this person in Philadelphia, so we can sit down and have a meeting and talk about how we can work together.
Great. And I'm just gonna also squeeze this in, the partnership that is, being finalized right now. Can we, so we can get the word out with the folks who are on this call, can we promise that that'll be in in the ImpactPHL newsletter when it's finalized, and we'll make sure that they know what we're referencing here and talking about? I guess that's a question to you, George. I'm just trying to make sure that we can make sure that information is officially shared out with folks.
Yeah, absolutely. Happy to kind of close the loop and make sure that we keep the community up to date.
Great.
Sure. Just a couple of questions that came in that people mailed in prior to our session. One of which was and this could be a confusion or not, is that is crowdfunding being used by nonprofits in fundraising efforts, or is that some other tool?
So yeah, we see a lot of crowdfunding for nonprofits. Typically, that is reward crowdfunding or gift crowdfunding. Can be a really effective way to get a lot of small contributions from a lot of people for a particular project. Generally speaking, Honeycomb ourselves, we have worked with some nonprofits, particularly revenue generating nonprofits. We never want to be in a position though where we are we're taking away donors and replacing them with debt for the nonprofit. So we don't work with a lot of nonprofits, but we're certainly open to it. But we've seen a lot of really successful nonprofit campaigns on GoFundMe and Kickstarter and some of the reward crowdfunding platforms.
And what are the tax implications on any of the investments that are made? So if I were to personally invest in, not in you, but in a business and through crowdfunding, and you just said the payouts are quarterly, what are the tax implications both during the length of the loan and at the end of the loan?
Yeah, so the tax implications are simply you're earning interest on your investment. So much the same as you would have to file taxes for the savings account interest. So it's just a simple 1099 INT that's sent out at the end of the year automatically by our system. And then it's just one document to put into your taxes. Okay,
great. So if there are no other questions, what I'm going to do is I'm going to turn to Peter to final thoughts from you, the final thoughts from George, and we'll tell you a little bit about the future programming that we have going forward.
Well, I guess this discussion has touched on what I think are the most important parts of this topic. I think the opportunity for communities to invest in themselves that Honeycomb provides should, if Honeycomb can break into the marketplace in terms of visibility, help small businesses, and particularly in small businesses in Philadelphia, which needs that kind of assistance.
This is unbelievable.
And any thoughts on your side, final thoughts, George?
Well, just really appreciate ImpactPHL having us and talking through this, what I view as a very important topic, and the really great conversation I'm seeing in the chat and trying to keep up with. This is a big problem. There's a lot of businesses that are being turned away. There's a lot of businesses who inherently have tremendous impact in local communities, And with relatively modest amounts of capital, they can do a lot of really good things in local communities. So excited to expand into Philadelphia and be a part of this community and to really help build this ecosystem.
Okay, thank you. So I want to thank George. I want to thank Peter, and my best regards to Brian to get well soon. And if you enjoy this type of programming and want to be part of ImpactPHL, contact Shernay, contact John Moore, contact Corey, and get involved with us. I also want to talk a little bit or just mention ImpactPHL. So if you're looking for investment opportunities like was just described by George and Honeycomb, you can access those through Opt Impact. It's a program that's created in partnership with ImpactPHL. Dermot Murphy is spearheading that for us. And so register in this program today. We have a program in December, thank you, a reminder, XXX Edge, there's a program on November 21st in Philadelphia. And both Patience Ball and Ruth Shaber will be here to talk about a book that they've created, but also to talk about gender-based investing, and just a really interesting book, and just happy to have them as part of the community. Lastly, we'll have our Total Impact Conference in May of 2023 on May 1st and 2nd. So please look for that and sign up as soon as possible. We have programming every month. So thank you so much for joining us today and making this program a success. Thanks again, Peter and George.